Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, June 20th. Prices overnight were mixed. Bean oil currently 40 to 45 points higher. Soybeans near session highs up 4 to 5 cents. Meal is off about $1. Feed grains there mixed, 1 to 3 better in the corn with new crop leading the way, while wheat prices, they have backed off about 2 to 4 cents from Wednesday's price surge. Speculative traders, there were heavy buyers in wheat on Wednesday. We had them buying just over 11,000 contracts in Chicago. I got that short position now down to about 79,000 contracts. Open interest did slip 6,000 contracts, an indication that Wednesday's price surge largely short covering in nature. Spec traders are also buyers of about 6,000 contracts of corn, this cutting their short position down to about 185,000 contracts. The CFTC commemorative traders report, normally out on Friday, is delayed until Monday with yesterday's Juneteenth holiday. Export sales later this morning. Wednesday's EIA report did show ethanol production slipped about 1% for the week, but that was off of all-time record highs. It fell to 326 million gallons, while above the pace needed to reach the USDA corn usage forecast of 5.5 billion gallons for a third consecutive week. Right now, I don't expect any changes in the July WASDE report. The Buenos Aires Grain Exchange, they placed Argentina's corn harvest at 50% complete, up 3% for the week. While suggesting yields have been running above expectations, they did hold their production forecast unchanged at 49 million metric tons, just below the USDA's 50 million metric ton forecast. Bean harvest winding down, 97% complete. Wheat plantings, they've shot up 22% for the week to 60%. They held their production forecast unchanged at 20 million metric tons, up 8% year over year. Weather-wise here in the U.S., we've got some scattered showers across the north central Midwest today with excessive heat across much of the nation's midsection this weekend. 100-degree plus temperatures expected to stretch as far north as South Dakota for at least a few more days. Highs in the low to mid 90s across much of the central and eastern corn belt into the early part of next week, middle part of next week. Extended forecasts continue to lean towards above normal temperatures with precipitation mostly normal to above normal. This into early part of July. I would look for crop ratings to improve in both corn and soybeans in next Monday's USDA crop updates. Geese corn traded to a new 2-week high here overnight. Topping out so far very close to its 50-day moving average. Secondary resistance is at 452 3/4, that being the 100-day moving average. New 4.5-month high in Nov beans, so far holding just below its February high near 1076. Prices are encouraging farmers to plant that last 5+ million acres, with today being a key insurance date for farmers across central and parts of the eastern corn belt. A new 21-month high overnight for bean oil, although that's pulled back a little bit now. New contract low for spot soybean meal. Support comes in at 278.50. Russia's ag ministry, they expect Russia to produce 90 million metric tons of wheat in 2025 while being able to export about half of that. Pretty consistent with the USDA forecast of exports at 45 million metric tons. Overhead resistance for July, Chicago, that rests up at 591, while Kansas City right now is teetering right near its 100-day moving average at 570.5. Thank you for listening, everyone. I hope you have a wonderful weekend.